All right, let's get right into it. Something huge just hit the tape for SoFi stock, and we need to talk about it. We're seeing a bombshell signal, a massive move by some of the biggest players, the so-called whales of the market. And honestly, this could signal a major shift for the company. So let's break this down. So, what is this crazy signal I'm talking about? Well, it all kicks off with one absolutely mind-boggling number, a number that just doesn't seem real at first glance. You are seeing that correctly. An increase of nearly 4,000%. That is a 40-fold jump in one single fund's position in SoFi. Now, a move that big, that isn't just tweaking a portfolio. No, that's a massive all-in declaration. And here's what makes this so important. Look at who made the move. Headlands Technologies. These guys are a quants-driven fund. That means they run on pure data and complex algorithms. There's no emotion, no gut feelings, no reading analyst reports. So when a firm like that multiplies its position by 40 times, it means their models have flagged a fundamental, deep-level shift in the company's value. You've got to understand, funds like this don't deploy that much capital for a quick 5 or 10% pop. No way. A move this decisive signals one thing. Their models are screaming that a major repricing event is on the horizon. They believe the market has gotten it completely wrong, and the data says a huge correction to the upside is coming. Okay, so that brings up the big question, right? Is this just one super aggressive quant fund going out on a limb? Or are they part of something bigger? Because, look, if it's just one player, you could maybe write it off as an outlier, a one-off. But what the data is showing us is that this is absolutely not an isolated event, not even close. As you can see, we're talking about a whole pack of whales moving in formation. Check this out. Nikko Asset Management just boosted their stake by almost 30%, bringing their total to a staggering $61.9 million. Then you have Manulife Group, who didn't just add shares, they opened a brand new position, dropping over $11 million right out of the gate. And the list goes on. TD Private Client, SVB Wealth, Atlantic Union, all making huge new buys. And that's what's so powerful here. It's the consensus. You have the supercomputer algorithm guys at Headlands, you have the massive global managers like Nikko, and you have all this new institutional money. And they've all, independently, come to the exact same conclusion at the exact same time. SoFi has hit a major turning point. So we know who's buying, but that leads to the most important question of all. Why now? What was the specific trigger that made all of this sophisticated capital suddenly flood in at the same time? It all comes back to this one little number, 11 cents. That was SoFi's earnings per share in their last report. Now, Wall Street was only expecting 9 cents. It might sound like just a 2-cent beat, but for SoFi, this number changed absolutely everything. And here's why that beat was a game changer. It confirmed something called GAAP profitability. Now, GAAP stands for Generally Accepted Accounting Principles, and for a lot of huge investors, I'm talking giant pension funds, endowments, this is a non-negotiable black and white rule. Their own rules often forbid them from even touching a stock that doesn't have positive GAAP earnings. So when that 11-cent number dropped, it did way more than just signal a good quarter. It fundamentally recategorized the stock. It literally moves SoFi from the high-risk speculative bucket into the institutional-grade profitable growth bucket. And just like that, a massive, massive new universe of potential buyers was unlocked. The floodgates are now officially open. Okay, but we have to be fair and address the other side of the coin, because if you've been following the stock, I'm sure you've heard all the noise and the fear about insider selling. So let's tackle that head on. And listen, on the surface, I get it. The data is clear. Key insiders, including the CTO, sold around 175,000 shares. So it's a totally fair question. If this thing is about to take off, why are the people who know the company best selling their stock? But this isn't about ignoring data, it's about putting it in perspective. And this chart really says it all. The institutional buying from just the top 3 funds we talked about was over 1.4 million shares. You put that next to the 175,000 shares insiders sold, and you're looking at buying pressure that's 8 times greater than the selling pressure. The math here is just undeniable. And you always have to remember the why. People's motivations are totally different. Insiders sell for all kinds of life reasons. They have to pay taxes, they want to diversify, they're buying a house. Institutions, on the other hand, buy for one reason, and one reason only: to make a profit. That's their entire job.
So when you see an 8-to-1 disparity like this, you follow the capital that's motivated purely by profit.
So, if we follow that profit-driven money, where does it lead? What's the target? What's the upside that these whales are betting millions and millions of dollars on? Let's look at the new goalposts. What's so telling is that the stock has already blown right past the old average analyst price target. The big money, the institutional conviction, is moving faster than the analysts can even update their models. It shows you the people actually moving the market are leading, forcing Wall Street to play catch-up to this new reality of profitability. See, they're not aiming for that old number. They're aiming for the new bull targets. And the first major one comes from Citigroup. They've set their target at $37. And Mizuho is feeling even more bullish. They've set their price target a bit higher, at $38. Forget the old numbers. These are the new targets that matter. So what does that $38 target really mean in practical terms? Well, from where the stock is trading now, a move up to that high-end target represents roughly a 40% potential upside. And that 40% return, that's the prize these institutions are betting millions upon millions of dollars to capture. So there you have it. You've got the 4,000% quant signal. You've got a stampede of institutional buyers, and it was all kicked off by that one critical profitability metric. The whales have made it crystal clear where they stand. They've placed their bets on a major repricing. The only question left is this the new reality for the stock?